Sweet. I hope everybody is doing well. Welcome to today's presentation. My name is Steve Nuri. Our presentation today on three-step analysis. This is kind of a combination of several presentations that I've done. We're going to kind of combine two subjects that I normally teach on both comparison analysis and what I call three-step analysis with PitView. There's a couple of new students in here. I go through my background generally on these classes just to give you an idea of who I am and make sure that I just didn't step out of a Holiday Inn Express to come in and teach Forex. Since there's a couple of new people, let me just quickly introduce myself. My name is Steve Nuri. Trading experience. My experience goes back 17 years. My entire professional career essentially has been spent in the markets. It's weird when you talk about 17 years because I'm only 21 years old, but that's a joke. But I started off as a trader, an options trader in Chicago at the CBOE. During my time in Chicago, then I moved on to working for what we call the options trading desk for a large brokerage company. And I also started doing education in the late 90s for the exchanges, both the CBOE and then also doing workshops and investor education for the CME, Chicago Mercantile Exchange. And then quickly in the early 2000s, I fell in love with spot Forex trading because really, Commodity Modernization Act of 2000 is what made the Forex really accessible to the retail trader. And since the early 2000s, I've literally traveled all around the world teaching Forex. I'm now the instructor and market analyst for PitView, along with owning my own education company called Nuri FX or NFX. So there's a little background on myself. PitView is something that I've never seen before up until about a year ago that speaks to essentially the question that I get from all of my students and a lot of retail traders, not only in the Forex markets, but in any market, is they always ask me the question of how do I trade along with the market makers? How can I trade along with the big money in the exchanges? The answer is never easy for that up until I learned about PitView, because up until this point, especially in the Forex markets, it's extremely difficult to be able to see what positions market makers were taking. And I believe PitView is something that gives people, is a special tool that gives people the ability to trade along with market makers, to trade along with the large liquidity providers in the market. So anyway, enough of that. Let's go ahead and get started with our presentation today by talking about our three steps here. Some of you are brand new to PitView. Some of you are already PitView subscribers, and I welcome you. A lot of you I've seen in my intermediate courses on Mondays, where we talk a little bit more about actual trading method. When we talk about the three steps that are involved with PitView, an introduction to PitView three-step analysis, there's three indicators through PitView that is kind of a top-down approach to trading, going from GlobalView to GroupView to PairView. And we're going to talk about all three of these indicators and to give you an overview of what they do for you and how they help in your trading. So of course we'll start off with GlobalView, which will also be kind of a combination of showing you what's called comparison analysis. Now listen very closely to this right here, because I will tell you exactly what one of the biggest mistakes that's made by traders in the Forex market is one of the same mistakes that stock traders make, or even futures traders, is that they fall in love with an individual currency. Like some Forex traders might say, I only trade the euro-dollar pair, or I only trade the pound-dollar pair, or I only trade the yen. Well, the thing that a lot of traders do that's a huge mistake in Forex trading is not trading what we call the in-play currency. The question you should always ask yourself when you go in to start your trading for each day is, which currency should I trade? At different times during kind of the cycle in Forex, when different economies come to the forefront and then other economies go to kind of the back burner, currencies will become in play. They'll become either what we call the bully or the wimp in the schoolyard. So to define in-play currency, as far as what do we mean by what is the in-play currency, we always call the in-play currency as being the currency that is driving overall strength or overall weakness in the market. I call these the bully and the wimp. The bully being the currency that is strong against all others. You can look at this from a short-term, medium-term, long-term standpoint. We also call this the prevailing trend, if you will. For example, and I'll show you this on the charts, when you look at all the currencies, against one another, oftentimes what you'll see, depending on what your time frames are, is you'll see one currency, for example, the dollar. When you compare the dollar against all the other currencies traded in the world over the long term, you'll see that the dollar's trend is driving overall strength in the market. What that means is no matter how strong other currencies are, they're all getting their butts whooped by the dollar because the dollar is so strong. Now, that is what we also call the driver, if you will. Whenever I mention a currency called the driver, that's the currency that is driving that overall strength or weakness. The wimpy currency, the driver doesn't always have, the driving currency in the market doesn't always have to be the strongest. The driving currency in the marketplace can also be the weakest. It can be the wimpy kid in the schoolyard. What that means is that's the currency that no matter how strong or weak other currencies are, they're all able to beat up that one individual currency because it's so damn weak, if you will. How do we find the in-play currency? We do that through something called comparison analysis. Comparison analysis, cross-currency analysis, it has many different terms, but essentially what it comes down to, the way we would do it on a chart, if you will, and this is a dated PowerPoint right in here. I'm going to show you live what this looks like here in just a second, is by looking at all the currency pairs together, not just looking at one, but looking at all of them together. Now, these are not all of the currencies. These are just the 8 major currencies. You're only going to see 7 charts because in this case we're looking at the yen compared against all the other currencies in the market during this time frame. So you see the yen is the quote currency on all these individual pairs. So when we look at, for example, the euro yen right up in here, we see that the chart on that is going straight down for that time frame. Well, that means the euro is getting weaker and the yen is getting stronger. Then if we were to look at the pound yen right up in here, that's going down. So that means the pound is getting weaker, yen is getting stronger. The Canadian yen, the dollar yen down in here, this is a short-term example. Dollar yen going down, dollar weaker, yen stronger. Swiss yen going down, Swiss weaker, yen stronger. Canadian yen going down, Canadian weaker, yen stronger. Aussie yen going down, Aussie weak, yen strong. And New Zealand yen going down, which means New Zealand weak and yen strong, of course. So when you look at all these charts, it really doesn't take a ton of bricks to fall on your head if you're pulling up all these charts together to say, okay, if I'm trading the currency that's in play, if I want to trade the currency that gives me the best overall chance of success over, in this case, short-term charting, when you look at the yen versus all these other currencies, and let's say you're trying to trade with the prevailing trend. You're trying to say, I want to trade with the trend because the trend is my friend. What's your view on the yen? Well, obviously, the yen is strong, so it's driving strength in the Forex market. So you would say the prevailing trend is yen strength. Therefore, when you look at it, you know that if you're looking at probabilities during a time frame such as this one, that your best bet would probably to take positions going long the yen if you want to trade with the trend because the trend is your friend. Now, the next question that you'd probably ask on here, and let me go ahead and I'll switch over before we go into GlobalView, which is the way PitView analyzes comparison analysis. Let me go ahead and pull up my charts here, and I'll show you an example of our good friend, the US dollar, the greenback, over the last 3 months. The question, great question. The question that just got popped up on my screen is somebody asked, how did you get your chart set up like this? I suppose that would be a great place to start. So let me, here, this is MetaTrader, but generally speaking, most charting platforms are going to have some kind of ability such as this. I'm not going to I'm just going to show it real quick of how I do it. On MetaTrader, when you have your charting station up, if you start off with a blank slate, if you wanted to pull up, let's say, all the dollar pairs, I have them all listed here at the top of my screen. What I'll do is I'll pull over the euro dollar, I'll pull it over and release it into the gray area. I'll pull over the pound dollar. Make sure you don't release it on top of another chart, and pull it over to the gray area. I'll pull over dollar yen. I'll pull over dollar Swiss. I'll pull over our friend the Kiwi, Aussie, just pulling over and releasing. And then I'm going to go up here under window and say tile windows. So once I get all the charts, like all the dollar pairs, again, if you're from other countries, like I get a lot of students from like Singapore, from Mexico, if you want to pull up your own individual currency versus the dollar, you can pull up that 8th chart if you like to see how your individual currency is trading. But this will pull up all the different currency pairs and put them on your screen. What you can also do is create templates. Like if you don't like the colors, I'll do this real quick and show you what I do. Like you can change the properties. A lot of people, I personally don't like black background charts, so I'll generally start off with a white background, a black foreground. I don't like that grid for some reason. You can customize your bars up and down. These are all customization things that you can do on MetaTrader or any other charting platform where you can customize like the colors on your chart. So I can kind of show you what I have my colors set to. Under common, I generally want candlestick charts to pull up. So I can change that chart up here on the euro dollar to reflect what template I want to come up on it. Once I have my colors to the way I want them to look, or my chart set up the way I want it to be, in this case I wanted to show you an example of a daily chart going back to June. So I just clicked daily, and I just kind of zoomed in once on this chart. Once I get this template set up, what I can do is I can go down here and I can save this. I can save this template and say PitView daily. Click save. And then I can change all these charts to reflect that. All I got to do is right click on each chart. I don't have to go through that again. I'll have to change the time frame because I just customized the colors. Oops. So then I can just change each individual chart. And I still got to change the time frames on all these, so I'll just click on each individual chart and change the time frame to daily. And that'll give you a kind of a sense of overall long-term trends in the market. Generally speaking, whenever I want to get a feel for what the longer-term trends are in the market, I'll go back approximately 3 months on a daily chart. If I want to here, I'll write this down for you. As far as comparison analysis, for long-term trends, if I want to take a look at the long-term trends of what the comparison analysis is, on comparison analysis, I'll go back, I'll look back 3 months on a daily chart. For medium-term trends, if I want to know what kind of the swing trends have been, I'll generally look back 1 month on a daily or 4-hour chart. And then for short-term trends, whoops, not trends, I'll look back 1 week on a 1-hour chart. And that's what I'll generally do to try to establish long, medium, and short-term trends in the market. But in this case, I just want to kind of give you an overall feel for what the prevailing trend has been in the market, long-term. Long-term trends tend to trump everything. When you look at the dollar in this case, you look at the dollar versus the euro, well, euro's going down, euro's getting weaker, dollar's getting stronger. So this is showing that for the last 3 months, dollar's been strong versus the euro. Dollar versus the yen, going straight up. Dollar's been strong versus the yen. Remember, on some of these, the dollar's the base currency. On some of them, it's the quote currency. Pound dollar going straight down. Pound is getting weaker. Dollar's getting stronger. Dollar Swiss going straight up. Dollar's getting stronger. Swiss is getting weaker. New Zealand going straight down. New Zealand weaker. Dollar stronger. Aussie dollar had a little bit less of a slope, but sold off here. Aussie weaker. Dollar stronger. And dollar Canadian has still been making higher highs and higher lows. Dollar stronger, Canadian weaker. So when you look at all these charts, if I showed you all these charts on the dollar, the easy thing is what is your long-term view on USD? Well, obviously you would consider the USD to be very strong, and that's the prevailing trend. You would also consider the USD to be the long-term bully in the schoolyard. Why? Because it's been kicking the crap out of all the other currencies on the screen. And that is an example, that's an example of comparison analysis on your charts, looking at actual price action. The question would become, how can we do this type of analysis based on market maker activity? And the answer to that would be GlobalView and GroupView. Those are two things that we use. So I'm going to go back to the PowerPoint and I'm going to show you this, because this, what I just showed you is how we do comparison analysis on the charts. And you can look at multiple currencies, you can look at multiple time frames to find long, medium, and short term. Obviously, we're not going to go through every single time frame here today. We don't have enough time. But that gives you a solid understanding, though, of what a driving currency looks like, especially on the long term. So let me go back to my PowerPoint here, and I'll introduce you to what's really, really, really freaking cool and really easy to use, by the way, what we call GlobalView. Now, for those of you who've gone through the other basics that I've taught, you'll know that what PitView is doing is it's showing you buy and sell imbalance activity from the market makers over a specific period of time chosen by you, the trader. So what GlobalView is going to do is it's going to show you which currencies over a specific time frame has been the most well-bid currencies by the liquidity providers, meaning the strongest currencies that liquidity providers are showing the most buying pressure on, and it's going to rank them all the way down to which currencies has been showing the most selling pressure, essentially. And this is based on the market makers, just like we showed on the chart. What it's doing is it's based on market maker activity of how these currencies are trading against all the other major currencies. So when you see this number here showing a buy imbalance, showing the dollar's been the strongest in this case over the last 4 hours, let's say on the chart, then that's telling you that the dollar's been the most, has had the most buying pressure or buying action from the liquidity providers over the last 4 hours, not just versus like the euro, but it's comparing it to all the other currencies. So it's doing that same type of comparison analysis to show you exactly what the dollar has been doing against all the other majors. So in this case, we would call the dollar the bully. Now, one other thing I want to remind you of is what's shown on PitView, in this case GlobalView, which is a PitView indicator. It's not shown on the charts. It can be shown on the charts. However, this is all based on what market makers are doing at that magical little area between the bid and ask price. That's what makes it so special and makes it so cool. We all know as market makers raise their bids, they're willing to buy at higher prices. As they lead inside the bid price, follow inside the bid price, they're willing to buy at higher prices. Therefore, that means that shows there's more buying pressure. As market makers lower their asking prices to where they're willing to sell at lower prices, that means there's more selling pressure. And so I know I've gone through this before in our PitView basics, but when you compare those two together, as far as what is the market maker doing on the bid price versus what the market maker is doing on the ask price, that shows you what you call buy and sell imbalances. So I mean, it's certainly showing you where the rubber meets the road in trading based on that magical little area between the bid and ask price, the bully and the wimp based on actual order flow, not charts, but actual order flow among the largest market makers, liquidity providers in the industry. Now, when you look at this, when you're looking at the top-down approach here, you would say, okay, well, the dollar, over the last 4 hours, the dollar's been the most well-bid currency from the market makers, so in showing more buying imbalance. So what's been the most well-offered currency? Which one has had the most selling action from the market makers? Well, in this case, obviously we have the Aussie down in here, which is showing us the wimpy kid in the schoolyard. Now the temptation is on GlobalView is to show, okay, well, I see the dollar here at the top. I see the Aussie down here on the bottom. This is generally, when you pull up something like GlobalView, this is generally where someone will have that temptation to say, okay, well, before I pull up any other PitView indicators, let me actually just go check the Aussie US dollar pair and see what's shaking on that pair. Just going to a 5-minute chart here, which is going back approximately about 4 hours on here, a little bit less than that. But you can see during this time frame that I was looking at when I created this, that the Aussie US dollar was going down. It was making lower highs and lower lows. Now actually, when I created this, as this was coming back up and hitting this trend line, that was when it was showing still a lot of buying activity on the dollar and selling activity on the Aussie. PitView is very good at being able to keep you identifying into what the actual trend is, because even as the Aussie US dollar was going up, which generally shows Aussie strength and dollar weakness, PitView is still showing this as a showing this as more of a sell and balance pair on Aussie USD. However, the thing is that before we go in and try to pull up a chart just based on what GlobalView is telling us of what's been the strongest, what's been the weakest over a certain time frame, we also have an indicator called GroupView, which means after we have found kind of the in-play currency, which one's been the strongest in the list on GlobalView and the weakest. Because of the fact that we're looking at actual order flow, what we want to be able to do is kind of double check. If we see that the dollar is the strongest in the market and let's say the Aussie is the weakest, we also want to double check those currencies to make sure that, okay, which individual currencies is the dollar strongest against when it comes to that order flow, and which ones are, and we can do the same thing for all the currencies on the list, if you will. And that's where GroupView comes into play. So on GroupView, you can see, when in the example of the yen pairs that we had on here, and sorry for doubling up on this PowerPoint here, you can see for the yen pairs that were on here that, we established the yen being strong by looking at the yen overall on all these charts. But then if we were to take a closer look at all these charts, now that we've established that the yen is strong, what we would do is we can go from currency to currency to check and see, okay, well, which currency is the yen strongest against? Which one does the yen seem to have the most extreme trend against? Like if you look at the trend up here on the euro yen, the yen is obviously in a much steeper decline versus it's much steeper uptrend, if you will, or much stronger versus the euro than it is, say, against the pound. The pound has certainly a little bit more sharper set of lower highs and lower lows, where the euro yen has more of a look of going straight down in this case. Also the dollar. So, you kind of get a feel for, okay, which one is it strongest against? And that's where GroupView comes into play. So the first step is, yes, if we're doing our 3-step analysis, we check GlobalView first. We check GlobalView first to see which one's the strongest, which one's the weakest. Now, I took this from a different a trading scenario that I actually did with the class a while back ago on New Zealand yen. So this is during a different time frame on a different day on the PowerPoints. So the first step, obviously, in the three-step process, check GlobalView. See which currency is the strongest, see which currency is the weakest. In this case, we see the yen is the strongest. If we want to see who the yen is strongest against, what we would do is we would then double-click. So we just do a double tap on the yen, if you will, and that'll show us who the yen is actually strongest against. And that's via GroupView. So what GroupView is doing, and this is something that you'll want to double check, because not only, this is a case to where, here, let me go back real quick on the PowerPoint. This is a case that when you go to GroupView, you will see that, you know, the strongest on GlobalView and the weakest on GlobalView is showing up as the strongest pair as far as who the yen is trading against on GroupView. That's not always the case, because you got to remember we are looking at order flow. But in this case, we double check it by going to GroupView, and now this list, okay, we know the yen is strong. So which currencies from strongest to weakest is the yen strongest to weakest against? So which one is it most well bid? Which one has the most buying pressure of yen versus another currency? People always ask, why does it have this little asterisk up in here? The reason why is because it's showing you that this pair has been switched around. If you know the yen pairs at all, you know that the yen is normally the quote currency. It's usually on the right-hand side when you're trading it on a Forex trading platform. Because we are measuring bid and ask activity, whenever we're trying to compare a currency against others, we always make it the base currency so that we can switch the bid and ask price around to make sure that it all streams together. So all that's telling you when it has an asterisk is that when you pull this up in like pair view, it's not going to show up as yen New Zealand. Whenever it has an asterisk, it means that this is being measured off, obviously, the New Zealand yen pair is how it's going to show up on your trading platform. So in this case, this does establish, okay, the yen is very strong against New Zealand. So it's been strongly bid against the New Zealand dollar, mean more buying pressure for the yen, more selling pressure for New Zealand. This is good for yen. This is bad for New Zealand. When we double check this and want to go into looking at a trade opportunity, what would our stance be from here? You know, a lot of trading just comes along with having a view. You know, at this point, are you bullish or bearish on the New Zealand yen pair? You see what I mean? Yeah, we trade it as the New Zealand yen. It's showing up as GroupView because it's showing the yen as the base up here. But we're going to trade it as the New Zealand yen pair. Would we be bullish or bearish on this pair as a whole? We'd be bearish. We'd be looking to be sellers. Now let me ask you a question. It's not a hard one. Do you think this takes a lot of the guesswork out of trading when you already kind of have a view of what type of opportunity you want to look for on a pair? Meaning all through the day as Forex traders, what we're looking to do is we're looking to either buy something or we're looking to sell something. It's pretty much as simple as that, is it not? So does this take a little bit of that off the table, that pressure off the table? If we already go in to look at the New Zealand yen pair and know that we want to be sellers on that pair based on market maker activity, based on if we want to trade along with the liquidity providers, we would certainly be looking for opportunities to go short on New Zealand yen. When you can take an entire side of a trade out of the equation, in this case buys on New Zealand yen, trust me when I say it makes trading much easier. Okay, I don't want to look to buy New Zealand yen today. I only look for opportunities to sell. And it takes your analysis to a whole new level when you're able to do that. Now at this point is generally when I'll start looking at a chart. I'll check GlobalView to look at what the strongest and weakest currencies are. I'll check GroupView to just make sure, you know, which currencies is the strongest currency, the strongest against, and then that's at the point where I'd be looking at pulling up a chart. Now, as far as this trade right in here, what we saw during this time was that actually New Zealand yen had been coming up and then had formed this kind of consolidation pattern in here on the hourly charts. This is what we call a swing trading scenario. So what we were seeing here is that it was going towards this horizontal support level. And if our thought process, if it breaks this horizontal support level, then that would probably give me an indication of a solid indication that I should be able to take a short position on New Zealand yen. However, we're not done yet, because what we would like to do is now that we've gotten to the opportunity where we're actually looking for trading opportunities, there's another indicator that we would want to pull up. So as far as what's next, let's go in and do our group view summary first. So this just complements the three-step process by showing you the details of each individual currency, ranking them from strongest to weakest. As far as and it's not hard whatsoever. If you can double-click a mouse, you can do this. I always say never suffer from analysis paralysis. It just makes things difficult. So as far as next steps, we already picked our currency. We've picked a pair. We picked our currency through GlobalView to see which currency that we want to see that's very strong or weak in the market. You can look at it either way. We picked an individual pair that we want to take a closer look at by looking at GroupView. And now it comes down to we want to pick a trade opportunity through PitView. PitView is going to give us the most detailed look of what's happening on an individual currency pair with all the liquidity providers involved. So what PitView is going to do when we look at the PitView basics, and we've kind of gone through this before, but it's worth repeating. Sorry, I went a little too fast there. We're going to narrow down our analysis into a possible trade opportunity by now looking at the detailed view of liquidity provider action. So this is going to give us an extreme detailed view of what liquidity provider action has been at the bid and ask price. And you can see here we have it up here for the New Zealand yen. Somebody asked about time frames. Well, why do you have 1 hour on there? Well, in this case, this was a time when we were trading off a 1 hour chart. I always tell people whenever you're looking for opportunities on any indicator, I don't care if it's a stochastic or MACD that is driven off the chart, or if it's something like PitView that's being driven off, market maker activity. The minimum time frame that you want to use is the time frame that you're actually using to trade off of your chart. In this case, my trigger chart, if you will, was a 1 hour chart. So what does a quick introduction into what PitView is telling us is LPID. What is this column right in here? LPID is because of what PitView is doing. Because PitView is measuring actual bid and ask activity for individual market makers, the banks and the liquidity providers require anonymity. And so instead of saying, and I am not in no way, shape, or form saying who this is because I don't even know, LP34, instead of saying that, well, that's Bank of America, we can't do that. The liquidity providers require anonymity. So we have to assign them an ID, and those IDs won't change. Once a bank or a liquidity provider gets assigned an ID, they keep that ID. It's kind of like their social security number in the PitView system. It doesn't change. So that's what LPID is. It's just showing you the individual liquidity providers by their actual identification number that we've assigned to them. The total percentage, what this is doing is it's taking you from session to session, like during the U.S. session, the Sydney session, Japanese session, London session. It's telling you from the start of each session, for example, if this was during the U.S. session, it's saying since the start of the session, it's showing you which market makers have been the most active at the bid and ask price to least active. And these columns right down in here, these are the totals. This total right down in here will always add up to 100% because it's showing you 100% of the overall liquidity provider activity for an individual pair. So at the top of the list, you can see LP34, out of all the bid and ask activity, LP34 has accounted for 43% of the bid and ask activity. And then it goes down into 1 hour L, 1 hour F, and 1 hour T. These three different columns. This is showing you for each individual liquidity provider, it is showing you the bid and ask activity based on when L means leading. So whenever LP34 has led inside the bid or an ask price, they have favored the bid price. Okay, leading means when a liquidity provider raises the bid and they're the first one to create a new bid price and go inside and create a new higher bid price, that's called leading inside the bid. A liquidity provider raised the price they're willing to buy. They were the first one to do it. They created a new bid price. That's called leading inside. F is what we call following. Following means that if I'm LP34, if another market maker raises the bid and creates a new bid price, a better bid that gets reflected in the market, instead of raising my bid to be higher than theirs, what LP34 can do is they can just follow that liquidity provider to that new bid price. That's called following to the inside bid. They didn't create a new bid price or ask price. They just followed another market maker to what we call the inside bid and ask. The inside bid and ask being the best bid and ask price in the market. The 1 hour T over here are the totals. What that means is that's an algorithmic total. It's based on the amount of activity they've had either leading or following, and then the total section, which is the section that I generally look at. The totals is showing you the actual algorithmic total between the two. Based on all the activity, whenever they've raised their bid or lowered their ask, the totals is showing you their overall kind of sentiment, if you will. One of the columns that I'll look at most often than not in PitView is right down in here, because what this does is, obviously this is already weighted to LP34 because they represent 43% of the activity. I'll often look at these totals down in here because this will show you based on all the total. This is an algorithmic total based on 100% of the market maker activity of where the buy and sell imbalances lie. A negative 2.55 would mean that there's a bigger sell imbalance, that the market makers favor the sell side of the equation, the ask side of the equation on the New Zealand yen pair. That may look a little weird to you, but that's actually, if it's negative and it favors the downside on New Zealand yen, remember we'd established that the yen was strong, right? If it favors the trading New Zealand yen to the downside, that fits in with our view. That means going short New Zealand yen is what we're looking to do. Short New Zealand, long the yen. When the New Zealand yen goes down, New Zealand gets weaker, yen gets stronger. All right. Actually, we've already gone through all of that. I did it on the screen, so I forgot that I had the PowerPoints go a little bit more detailed on here. We've already gone through this. I went through this on the columns by writing it out with you. My apologies. Which is what I did last time, and I forgot that I actually cleaned up the slides a little bit and actually went column to column instead of writing all over them. So how do we use PitView? This is a common question that gets asked by people is, how do I use this stuff to actually execute a trade? Well, there's three common ways that people use the PitView indicators. Trade confirmation for our more astute professional traders, that already have trading methods, entry and exit techniques in the market in which they trade. They use PitView as the ultimate confirmation indicator. What it does is, if you're getting a buy signal on your underlying system, let's say you're getting a buy signal on, you use a moving average crossover system. Well, if you're getting that buy signal and at the same time PitView is showing green, or PitView is showing green on the totals, then that means that when you take that buy, you are trading alongside which side of the market that the market makers favor. So it really does give you more confidence and direction using it as a trade confirmation tool. Trade management is a way that people will use it, that once they're in a trade, you can use it to, if you're in a trade and you see that you're on the same side as the market maker activity, you can actually maximize your reward potential, which are your profits, and minimize your loss potential by possibly getting early exit signals out of your trade. Either early exits when it comes to your losses, to where maybe you don't lose as much on a trade, or you can get later exits on your profit-taking levels, meaning instead of taking a profit off the table, let it ride a little bit more if you're on the right side of the market. And then there are folks that have created entire trading methods and systems, which I go over in our intermediate class. I will be going over in our intermediate class here in a couple of weeks, which is trade entry. You know, we buy or sell based on the actual PitView indicators themselves, much like somebody might use a stochastic or a MACD making a positive cross to buy or sell. There are people that use PairView as an indicator for actual high probability trade entry. The one we'll talk about right now, since will be trade confirmation, because that's probably the easiest way to look at it and to use it initially. This is just an example of how to use PairView as a trade confirmation. This is not the New Zealand yen. This is just an example that I use with students based on an underlying system that I actually teach. I actually teach this to the intermediate students. Called the London breakout, which is a short-term trading method where we look for breakouts during the London session. And in this case, we got a sell signal on our London breakout. And when you can see, when I'm getting a sell signal on this method, it's breaking through the Asian low, and I'm getting a sell entry. And this is an existing trading method that I already have. You can see what I do is I look at the 1 hour PairView total, and I'll look at the 5-minute PairView total, because this is a short-term 5-minute trading method, and they show red, which favors the sell side of the equation on the euro dollar. When those show red, that's giving me just better indication, if you will, that I'm taking a high probability trade on the right side of the market. So that just gives us the right, or the added confidence that I can sell euro dollar in this case on this short-term method as a confirmation tool and still be trading alongside what the market makers are doing. See, what often happens before I use PitView in this trading method, what would sometimes happen is the London traders would break the low and then come right back up and bring it into a new high, and that would be what we call a whipsaw. I'll put a W on here, a whipsaw. Just using the PitView as a confirmation tool, I can avoid whipsaws, because oftentimes when that whipsaw effect will happen, you know, in this case it might show green on the 1 hour and 5-minute totals, meaning even though it's broken through a new low, the market makers have actually been favoring the bid side or the buy side of the equation, and that means that I may not take that trade if it were showing green, and that can help me avoid that whipsaw effect. So that's another way to use it as a trade confirmation tool. Anyway, that's a different system for a different day. You know, using it for trade confirmation, you know, it can be as simple as just green or red, essentially. You know, if PitView is green, you would look at it as favoring the buy side of the equation on the underlying pair. If it's red, you would show it as favoring the sell side of the equation. So green or red, absolutely. Now that I've kind of gone through green and red, or you know, how to look at PairView as far as the totals go, I can show you a little bit of how this fits into our 3-step process. So let me go in and kind of show you here. You know, we've already checked GlobalView. Let's go back to our case study, if you will. We already checked GlobalView. We saw that the yen is strong. We double-click the yen to pull up GroupView, and we confirm that the yen is the strongest against New Zealand. So just reviewing our 3-step method. From there, we looked at a chart. We saw that there might be an opportunity on New Zealand yen if it were to break through this low right in here. Remember, it's starting to turn around. You can almost look at it as kind of a miniature head and shoulders pattern, if you will, but this has obviously formed a horizontal support level. And so at this point that we're looking at the chart, remember, what I'm saying on here is, okay, yen is very strong, New Zealand is very weak. If I can get a break of this support level, you know, this is the ultimate trade confirmation here. If I can get a break of this support level, then I want to go ahead and sell New Zealand yen and look for it to make a move down. So that would be kind of the action that we're looking for. And what I would use to complete that action is PitView to confirm the actual buy or sell imbalance on New Zealand yen. So looking at PitView, let's just continue on with our three-step process. I can kind of show you what happened here. This is a trade that we actually took. New Zealand yen broke through horizontal support right here. So it made, and PitView was already showing those numbers before this break even happened. It was showing large sell imbalances on New Zealand yen. You could have actually, if you were a more astute PitView trader, has just went ahead and sold if you were using it as just a straight up entry method. But this is more of a confirmation type of indicator that we're using it in this case. So New Zealand yen breaks through horizontal support. At the same time, New Zealand yen is showing both leaders, followers, and totals for all the market maker activity is showing red. So it's favoring the sell side of the equation. Now, if you don't think this is cool, I don't know. I don't know what to say. If you don't think that this is freaking awesome, I honestly don't know what to say, because what have we established so far? Now, this is not based on any type of chart functionality. Okay, this is all based on the fact that we checked GlobalView and we saw that the yen was very strong, New Zealand was very weak. We checked GroupView to make sure that we're matching up the bully with the wimp. You know, we're matching up essentially based on market maker activity, based on what they're actually doing at the bid and ask prices. We are matching up the most well-bid currency from the market makers, which is the yen, versus the most well-offered or sold currency from the market makers, which is New Zealand. We're now getting a breakthrough horizontal support. It's still confirming this. This is, remember, our entry was on a 1 hour chart. It's still confirming on the pair view. I will generally look at this total section down in here. It's confirming that sell signal by showing, yes, they still favor, the overall sell imbalance still favors selling New Zealand yen. So that's the action. So we're still looking at a strong yen. So our action here should be quite obvious. I'll show you kind of the result here. The sell entry is right when it broke through. We didn't wait for confirmation. We didn't have to wait for confirmation. This is just a simple 1-to-1 risk-reward ratio trade. Our sell entry was right here at 86.275, right when it broke that horizontal support level. Generally speaking, when I put in orders, I'm always going to put my stop orders using previous highs and lows. So I put my stop here at 86.509, risking about 21 pips or so, 23 pips, 23.4 pips to be exact. And then right in here, within just a couple of hours, we had our limits reached. A lot of times when I'm doing intraday type of swing trading, I'll look for just a 1-to-1 risk reward. But in this case, we reached a nice little profit of 23 pips within just a couple of hours after getting a sell signal here in New Zealand yen, all of which was favored by PitView. Everything was confirmed, if you will, by PitView. Pretty cool stuff, if you ask me. That's what I think makes it such a strong indicator. You know, pick a currency, pick a pair, pick a trade opportunity, and just go from there, if you will. Now, as far as the presentation goes, let me go in here real quick. What time is it? Okay, I got about 7 more minutes. If you allow me, what I'll do real quick is I'll pull up PitView to just kind of give you an overall view of how to set it up, if you will. And I'll since most of you are brand new to PitView, what I'll do is I'll just show you kind of a very basic way in which you can set it up, just to get a view of different time frames and what I look at when I'm just taking a more basic view of the market. So let me go in here and do that real quick. Let me just go and pull up my computer. I already have my computer up. What I meant was, let me pull up my desktop. here was all those charts that we had up. So I usually keep my charts up on here. I'll just kind of pull those over to the side here. When you first pull up PitView, what you're going to do is, if you want to set up like your own little layout or template, the first thing that you want to do is you want to pull up the 3 indicators that we were just talking about. The way you would do that is, if you just, when you pull up the basic PitView desktop, if you go up here under indicators, there's GlobalView. So I'd left click on GlobalView, and that'll pull up my GlobalView screen. Under layouts, indicators, from here I can, essentially once you have GlobalView up, you can really just double click. Once you have GlobalView up, you can really just go double click. So let me show you how it works. You can pull up the individual indicators up in here. You see GlobalView, GroupView, and PairView right up in here. So GlobalView, if you're looking at it, it's going to show you many different columns on here. And it all really depends on what kind of charts you're trading off of. What I'll generally do when I'm on GlobalView is, if I right click anywhere on this screen and I go down to show or hide columns, what I'll generally do is, I told you, is I like to look at the totals a lot. If I'm trading off a 4-hour chart or a 1-hour chart, it all depends on my time frame. Then that's generally the first time frames that I'll pull up on PitView. But you can look at longer time frames, if you will, to get a better indication of the overall trend. Just so I don't have as much noise on my screen, I'll generally just pull mine up to where it only shows the total screen on here. And so now all you see on here, here, let me go in here real quick. The total percentage is not really something I need to see either. Generally speaking, I'll just show the group. All I want to see is, okay, if I want to look back the last 4 hours in the market and I wanted to know which currencies were strongest to weakest, you can see the dollar's the most well-bid currency over the last 4 hours. Pound is showing to be one of the most well-offered currencies. From here, all I need to do is, if I want to take a closer look at the dollar pairs, I can double-click on the dollar, and that'll pull up GroupView right down in here. Now, GroupView, I'll do the same thing. What I'll generally want to look at is, I don't like to have a lot of noise on my screen, so I just want to look. When I go to show and hide columns, all you do is right-click. I just want to look at the session totals. I just want to look at the total section. I don't want to look at anything else. So on here, when I look at the GroupView, it's showing the dollar is most strongly bid against the Aussie, strongly bid against the pound, New Zealand. So this will rank all my symbols from strongest to weakest here. And then from here, if I want to take a closer look and go to PairView, okay, well, let me take a closer look at Aussie US dollar. I can go to PairView. And generally speaking, on PairView, a lot of people, when you pull up PairView, it'll show you a lot of different columns. I know most of you are brand new to PitView. When you look at too much information, a lot of times all it will do is just really confuse you. So what I might do is, depending on what time frame I'm trading, is, let's just assume that I want to look for an opportunity on the 4-hour charts, and that's why I have all these up. What I might do is just show like the 4-hour totals on here. So remember, you can go and show and hide these columns. I also don't like those little ticks on there. You can show and hide the columns to just give you a much more basic view of what's going on. In fact, sometimes I don't even like to look at the actual market makers. A lot of times I'll pull up PairView and I'll just readjust my window to where all I'm looking at is 100% of the market maker activity, and I'm looking at just the total section for 100% of the market maker activity. I think that makes it a lot less noisy, if you will. And then from here, I might go in and look at, the Aussie dollar. Now, if I'm looking at 4 hours over in here, if I'm doing swing trading types of trades, what I might be looking for is looking for sell opportunities on Aussie dollar today. either by looking at 4-hour charts, or another swing trading method was, now that I'm looking at the overall trend on all of these, showing the dollar strong versus Aussie, I might pull it up on a 1-hour time frame. These are all things that I discuss in my other courses, where I go in a little bit more detail on trading methodology. But in this case, this might be where you go in and look at the Aussie and the Aussie US dollar. You can see that it's been coming down. This is one where it does match up overall with what's happening on the charts. From here, if you're looking for like simple support and resistance trades, maybe you'd be looking for it to, as it comes up and hits the trend line, maybe looking for selling opportunities. If it gets to be too big of a sell imbalance, maybe just looking to sell right now, because obviously it's retracing back. But, that gets into where, what would actually signal our trades from here. This is actually a pretty big sell imbalance on Aussie US dollar. Sometimes it's worth it, in my opinion, just to take a shot. Just sell it when you see a huge imbalance, and put your stop above a high and look for a quick 1-to-1 risk reward. That all gets into trading method. But this is where we would just go in and view opportunities. If I don't see anything I like on Aussie dollar, go to the pound. You pull up pound dollar, say, okay, well, this is showing something interesting on here. When you look at the pound overall, you look at the pound, you can look at the pound right now as kind of making an ABC correction. It's not really a Gartley pattern as we've discussed in the advanced class, but making kind of an ABC correction right in here. It's showing a large sell imbalance over the last 4 hours. If I was looking at that on a 1-hour time frame, you might be looking for sell opportunities. Let's see, swing highs, swing lows. Let's see here. Kind of covering the gap from the weekend. Maybe looking for opportunities to sell pound as it's coming up. This is what we call a divergence, because it's showing obviously selling pressure on pound dollar. Yeah, -11 on the 4-hour time frame. Maybe even looking to sell it if it comes up to the 78.6% retracement. Let me bring this up. I meant to put this at the top. Maybe selling it if it comes up to like the 61.8% retracement level, or even earlier, trying to get in on the pound. This is a retracement. Difference between a trend and a retracement is that when I'm looking at this, if I'm seeing the pound has been shooting down and I see this coming back up, instead of looking for buying opportunities on the pound, this is another thing that PitView can do for you, and it does very well for you. It shows you the differences between trends and retracements. For example, when the pound's coming up, it may be tempting for people to try to buy this in the midst of an uptrend. Maybe you think this is creating a new trend. When you look at PitView, the activity still favors the sellers on the pound dollar. So this would not be considered a new trend. This would just be considered a retracement. So as it comes up, you might be looking for opportunities to actually sell or go short on the pound dollar. You can look at it via multiple time frames, add an indicator, if you will. This is kind of a little three drive pattern occurring right in here. So yeah, selling on the pound may not be such a bad idea. Anyway, I'm going off on tangents, but whenever I get into live charts, I tend to talk way over people's heads sometimes. But these are all opportunities to where if you're looking for strongest currency, you want to see who it's trading the strongest against. You can see the dollar is actually very well bid against all the currencies except for the yen right now. You can go in and look for multiple opportunities on these. New Zealand. You can even look at dollar Canadian. Dollar Canadian is actually kind of an interesting one, because when you look at that, dollar's actually very well bid against Canadian. This one's actually coming off and coming down to an actual 78.6% level. It's also coming down to a support level right down in here. If you were a 78.6% retracement trader, you might look for buying dollar Canadian if it were to, if the next 4-hour chart, if it closes above that 78.6, it already actually kind of has, buying it, putting your stop 1 pip below that low, and looking for a 1-to-1 risk reward trade. Sorry, I know I'm based on your risk there. That may look like a good, nice little buy opportunity because we know the dollar's pretty strongly bid right now. And then there's also our good friends dollar Swiss and euro dollar. Those present some interesting opportunities. Dollar's showing very well bid today, so it's the strongest. This is another type of trading scenario that I go over in my other intermediate classes, to where we have an established trend line here on the 1-hour time frame. If you were to go in and look for, if we get what we call a lonely bar is a candle that is completely beneath a trend line, open, high, low, and close, then I would be looking to be a seller. If this stays the course on like euro dollar and stays negative on euro dollar, then looking to be a seller if it breaks that trend line. Put your stop right up above the swing high, either at this high or this high, and looking for a quick 1-to-1 risk reward ratio trade. These are all opportunities that would make us long the dollar. These are all opportunities. The dollar is actually very strong against all of these currencies except for the yen. But these are all opportunities that would make us long the dollar. We see the dollar is very well bid today. So you can mix and match these things up, but it's a very interesting thing when you already know, if I'm looking at all these charts, well, any trade that I'm looking for today, I'm probably going to be looking to go long the dollar. Anyway, if you want more information on that, if you're a PitView subscriber, or even if you're subscribed to a free trial, you're welcome to attend my classes on Mondays, where we talk more about individual trading methods. I love doing live trading and live analysis, so you can kind of see that on there. I don't really have a lot of time to do it today. If you do have any questions, you can feel free to email me at steve.nuri@pitview.com. To subscribe to PitView or to start a free trial, if you're not a PitView subscriber, or if you want a free demo or trial, go to pitview.com/web, and you can sign up for your trial or subscription there. For more videos or sign up to make more classes, you can just always go to pitview.com. Other than that, folks, I'm kind of losing my voice. I kind of sound like Morgan Freeman at the moment. I want to thank all of you for coming in today. Thank you for your time. I always enjoy doing classes no matter what the subject matter is. So if you do have any questions, just want to chat back and forth, whatever you might have, shoot me an email. I'm more than happy to answer any questions that you may have. So until next time, until next week, I will chat at everybody later. I want you to all have a fantastic weekend. Go Colts. We need our first win. So I will chat at everybody later. Bye-bye. Thanks for coming in.